The consensus is wrong. It's just so wrong, it's not true. It was unprecedented, a failure as a political event from an economic perspective, a catastrophe. I'm not sure there's ever been a previous occasion when the Chancellor has flagged what she's going to do in the budget.
Will Rachel Reeves raise income tax to solve her budget crisis?
2p on all the rates would raise more than £20 billion.
She's going to have to do something. 20 billion is a considerable amount, and you can't just fiddle it around.
She's got this real nightmare scenario. It's hard to see how she can emerge with her reputation intact.
Going cap in hand to the International Monetary Fund to bail Britain out. We could be going back into a situation like that.
No economy has ever successfully taxed its way to prosperity. Many economies have taxed their way to economic oblivion.
2 weeks before Budget Day, Chancellor Rachel Reeves did something unprecedented. A pre-budget speech designed to prepare the country for tough choices.
She sought to blame all sorts of things for the tough decisions that she's had to take. That's the bit that really, really aggravated me. It was complete nonsense.
Let's go through them one by one. Tory mismanagement, Brexit damaged the economy. Liz Truss's mini budget. Debt is too high. Interest costs are crushing us. High and persistent inflation. Heightened uncertainty and new tariffs. Historic underinvestment from businesses in the UK. Low productivity equals low growth.
It was an exercise in expectation management, because I think what she was trying to say is, look, I've got to make some tough decisions here in the budget. I just think the future looks a lot brighter. It's not perfect by any means, but it looks a lot brighter than a very, very crowded consensus believes.
Neil, you've called the Chancellor's pre-budget speech an exercise in expectation management. Why is that?
I did endure the whole speech. It wasn't very long, but it was very boring and very dull. It was an exercise in expectation management, because I think what she was trying to say is, look, I've got to make some tough decisions here in the budget. I'm preparing the ground for bad news, tax increases, etc. I think there's a nuance there, by the way. I'll come back to that in a minute, but tax increases, there's been speculation about those for months. But she basically confirmed, yes, tax increases are necessary. These are tough decisions I've had to take. And I think it was a failure as a political event, and it certainly was a catastrophe, frankly, from an economic perspective. I mean, not that it caused massive damage, but the Chancellor stood on her hind legs, and then she sought to blame all sorts of things for the tough decisions that she's had to take. It's the bit that really, really aggravated me, because it was complete nonsense.
We're going to go through each of those things one by one.
And the elephant in the room, of course, is the reason that she has to increase taxes is because government spending is too high. And her sort of diagnosis is, well, no, spending's not too high, taxes are not high enough. Therefore, we've got to increase taxes to meet the higher level of spending that, frankly, they've instituted. So, it was ridiculous, frankly.
Certainly, I'm not an economics expert, but I've never heard of an economy taxing itself into prosperity. That's not something that I believe you get taught.
Well, you're right. You're right to have that view, John, because that is not the way you generate prosperity. No economy has ever successfully taxed its way to prosperity. Many economies have taxed their way to economic oblivion, but I'm not suggesting that that's where we are, by the way, not at all. But what I think we confront with the Labour government in the UK is a set of missed opportunities. There are things that the government could do to help the economy. And instead of doing those things, it's doing the opposite. And that's what's frustrating.
So you've called it expectations management, pointing to higher taxes plus some spending restraint. Is that your base case going into this budget?
Yes. Look, the consensus view is really very much focused on tax increases. But the nuance that I mentioned earlier is that I think the expectation management thing was also directed at the backbench, or her own backbenchers. Because I think what she's going to try and do, whether she'll be successful or not, I don't know, but what she's also going to try and do, I believe, is exercise some sort of spending restraint in the budget. That she tried and failed in the past. Well, Labour, the administration have tried and failed in the past. The backbenchers voted down the spending constraints that were introduced in the last budget. That went nowhere. But I think they're going to try again. And this time, I think they're going to try and create a situation where the spending restraint will not have to be voted on. And that's my sort of gut feel.
Let's go through the main claims that she made on stage this week. There were 7 claims in total. The first thing she mentioned, Tory mismanagement and that Brexit damaged the economy. You say there's no evidence Brexit damaged the UK economy, but walk us through the data that you've looked at.
It's a popular myth, and it's a popular narrative with those who opposed Brexit, of course. Look, the data is unequivocal. Look at, for example, how the UK has performed relative to our EU peers. We've underperformed the US, and we could have a whole podcast on why I think that's happened. That's not really for this particular episode, but it's very clear that the UK economy has performed almost exactly in line with the EU average over the period since 2016. So the period between 2016 to date, the average growth rate is something like 1.5%, and for the UK, and it's 1.5% for the EU. And the period from 2020 to today is roughly about 1% per annum, and that's almost exactly the same as the EU. So there's no macroeconomic evidence to say, of course, the UK was fundamentally damaged by Brexit. And look, you can see in the economic underperformance of the UK, not evidence at all. You might argue in a counterfactual sort of way, well, had it not been for Brexit, we would have outperformed the EU average. That's speculation. The evidence is that there wasn't harm done. But more specifically, those who argue that there was harm done point very clearly to trade with the EU. And what they point to in particular are goods exports from the UK to the EU. Now that's the focal point of their view that harm was done to the UK. It became much more difficult for UK exporters to export goods to the EU. And I'm not arguing that for some sectors, life became much more difficult. There was a lot of paperwork, a lot of admin, all sorts of uncertainties that affected specific industries. But for the economy as a whole and for trade as a whole, there's absolutely no evidence that the harm that people talk about was caused. Because if you look at the data, the percentage or the proportion of our exports to the EU as a proportion of our total goods exports didn't change at all. In fact, if there is any change, it actually went up a bit. So in other words, post-Brexit, the proportion of goods exports to the EU actually went up relative to goods exports to the rest of the world. How is that compatible with this idea that we laid waste to our ability to trade with our EU partners? There's no evidence of that. The analysis that I did at the time of or just prior to the Brexit vote really argued that Brexit would neither be beneficial nor harmful to the UK economy. What that paper concluded back in early 2016 was really the claims on both sides were just didn't hold water. The establishment's view that Brexit would be a disaster for the economy was not right, but equally neither was the claim that coming out of the EU would result in unalloyed riches that the economy could deploy on domestic needs. I mean, that was all rubbish as well. The reality was that Brexit really didn't fundamentally affect the economy. It was a pretty irrelevant economic event, frankly, in my view. Of course, lots of people are very passionate about it. Lots of people get very, very, very heated about it. I should know I've been on the receiving end of a lot of unpleasantness as a result of what I was perceived to be saying about Brexit.
As you say, we commissioned a huge economic report and we shared that actually with the world. But I remember you taking a lot of heat for that at the time, and it seemed to be entirely misplaced.
What I think people were very upset about was that I wasn't explicitly saying Brexit is a crazy idea, which is what the establishment really wanted everybody to say. I didn't say that because I didn't believe it. I didn't believe it was either good or bad for the economy. I thought it was pretty much irrelevant. What was really, really important for the economy were lots and lots of other things that we argued about in the paper, which I won't go through now, but more fundamental challenges for the economy in the future, for me, were much more important than whether we were in or out of the EU. But, of course, I'm going to be criticised again by people who thought that Brexit was very damaging. Now, it might have been damaging to our status in the world, damaging to diplomatic relationships with our EU trading partners, all sorts of those sort of softer political things. That's not what I'm arguing about. I'm arguing about economics here. Where is the evidence that Brexit damaged the UK economy, damaged trade with the EU? There isn't any.
And if you want to hear more about Neil talking about the impact of Brexit on the UK economy, we covered that in quite a lot of detail a couple of weeks ago on an earlier episode. I'll leave a link to that in the description. So it's not Tory mismanagement or Brexit. Let's move on to claim number 2, which is that it was Liz Truss's mini budget that caused the problems today.
This was one of the more extraordinary claims. I mean, Liz Truss resigned over 3 years ago. Her administration lasted 49 days. Her budget was never enacted. I mean, come on, Rachel. Whose leg are you trying to pull?
Famously, there was a lettuce that lasted longer than Liz Truss did.
I think the establishment ganged up on Liz Truss. I think there's unequivocal evidence that that's true. They did not like what she was about to do. I actually think many of the things that she was proposing to do were absolutely the right medicine for the UK economy. The problem is, of course, that the execution of the plan was bungled. It was too dramatic, too early. She hadn't warmed her audience up. It was all a bit rushed, and the establishment really didn't like it, and got the knives out for her. And who won? The establishment did. It's just not credible to blame Liz Truss's budget, which was never enacted, for the tough choices that Rachel Reeves has got to take now. I mean, it is just funny. It's just ludicrous.
So what about claim number 3, that debt is too high and interest costs are crushing us?
Yeah, I agree with Rachel Reeves. Debt is too high, and interest costs are too high too. I mean, £100 billion a year. Interest costs are very substantial. But let's deal with the debt first. I've already sort of pointed to this in answer to sort of claim number 1. But you don't cure the nation's debt by adding to it. You don't solve the excessive debt problem by borrowing more money and basically opening the fiscal purse and spending like crazy, which is what this government has done. I mean, if you're really worried about the national debt and how excessive it is, then you've got to address spending, which is something the Labour government just will not acknowledge. I mean, it's the giant elephant, it's the mammoth in the room that the Labour government cannot possibly address. But it is at the root cause of the problems that we confront, in part as an economy. Our national debt is too high. Our spending is too high. Why have we got excessive government debt? The pandemic and the government schemes that were introduced after war broke out in Ukraine. Those two things together added over £400 billion to the national debt and damaged the economy. It went up hugely as a result of the ludicrous decisions that were taken during the pandemic, but it's carried on growing.
So you pointed out to me earlier that only about 1,000 of the £6,000 per head spending rise since the pre-pandemic levels is due to debt interest.
Extra debt interest, yeah.
Presumably the rest of it is welfare and public sector pay, etc.
The government is spending about £19,000 per head of population. That's up £6,000 since before the pandemic. £1,000 of that extra £6,000 is extra debt interest. Think of that as the additional burden of the pandemic. Okay, the remaining £5,000 is all about extra government spending. And there's your mammoth. There's the elephant in the room.
Claim number 4, high and persistent inflation.
There was one other thing I wanted to come back to, which was the claim she said that debt was too high, but interest costs are too high. Yeah, interest costs are too high. They're in part the product of what we just argued, which is debt's too high. But it also, remember, debt costs, the 10-year yield is in large part driven by base rates. Okay, Why are base rates the highest in the developed world in the UK, apart from places like Australia and New Zealand? I mean, at 4%, they're twice what they are in the EU, 2%, and the US cut last week to 3.75. So we got the highest rates amongst our peers in the developed economies of the world. I'm afraid the Chancellor should look to her own policies as having driven inflation up to the 3.8% level that we now have. So back in September last year, inflation was at 2% in the UK economy. It's now at 3.8, very significant proportion of that additional inflation that we've endured in the UK economy over the last year came from the measures that the Chancellor introduced in last October's budget. So once again, the Chancellor's just talking out the side of her mouth. I mean, it's just nonsense. If base rates were lower, debt costs would be lower. They will be coming down over the next 12 months because interest rates are going to come down. But they went up and have been higher than they would otherwise be because of the measures that the Chancellor introduced in last October's budget.
So claim number 5 was heightened uncertainty and new tariffs.
Look, this is more bull, frankly, from the Chancellor.
You said the tariffs argument was a rounding error. Can you just explain how you got to that?
So goods exports to the US economy, which are the ones that will be affected by tariffs. We've done a deal, by the way, with the US economy. So the 10% tariff that I think that the UK has with the US is hardly the end of the world. But nevertheless, okay, let's just look at the thing that would be affected by Trump's tariffs. Goods exports to the US. Well, they're down 5.9%. And I think there are something like 62 billion. So there's been a £4 billion worth of, if you like, impact, maybe of additional tariffs. If the decline in goods exports to the US was all about tariffs, then the net attributable cost to the UK economy is £4 billion. Well, we are about a £2,900 billion economy. Really? It's just not credible. But additionally, which is even funnier, is that she talks about, well, this is extra uncertainty, extra global uncertainty. You know, what we didn't anticipate, all this extra sort of economic uncertainty, and you know, this is why I've got to take these tough choices. Well, back in March, the OBR forecast that UK economy would grow at 1% this year. Well, looks like growth will be 1.5%. So whilst the UK, apparently, according to Rachel Reeves, has been grappling with additional uncertainty, economic growth expectations from the OBR and the Bank of England have been upgraded. And today, the Bank of England upgraded its growth forecast from 1.25% to 1.5%. So even more total rubbish from Rachel Reeves, I'm afraid. It's just not credible. It's ludicrous.
Well, let's talk about claim number 6, which is about historic underinvestment from businesses in the UK.
Another slightly sort of bogus claim. It's one of those things, and many people have written about this, but you know, when lies are told enough times, they become fact, truth. There has been a regular lie told about the UK's investment, UK investment spending. Business investment in the UK is at a near 30-year high. When you look at that business investment spending and adjust it for the proportion of the economy that is accounted for by more capital-intensive manufacturing industry, our track record on business investment looks outstanding in relation to our economic peers. I just don't think this argument is at all credible.
So business investment as a share of GDP is near a 30-year high.
Yes.
And it looks strong.
It's growing, yes. I mean, a few weeks ago, the OBR upgraded its estimate of investment spending in 2024 by over £42 billion. I'm not saying that we've got the most sparkling infrastructure in the world or that we've got the best businesses in the world. But it is just equally not true to claim that there's some sort of investment disease in the UK. The private sector has not been investing. It has been. I'm not arguing that it couldn't invest more. I think that if there was more business confidence in growth going forward, I think businesses would invest more. But it's wrong to argue that business investment in the UK is undercooked. It doesn't look like that to me at all. And a proper analysis of the data doesn't support that claim.
So claim number 7, now this must be it. Low productivity equals low growth.
Right. Well, this speaks to the whole productivity debate, which I've been writing about probably on too many occasions in recent months. This is a real bone of contention for me. Okay. So I feel slightly sorry for the ONS. The ONS is in a complete and utter mess. So we don't know what baseline productivity in the UK economy is. And indeed, a few weeks ago, we had to upgrade productivity because at the end of Q2, nominal GDP in the UK was 2.25% higher than the OBR had estimated back in March. 2.25% of GDP is massive. It's huge. I think it's 65 billion pounds of output. And we are led to believe by all of the rumours and frankly, reading between the lines in terms of what Rachel Reeves said, reading between the lines, she's saying, yeah, the OBR have downgraded their productivity growth assumptions over the next 5 years. The reason it makes it very dangerous is that the OBR is basically saying there's a sort of direct line correlation or direct relationship between productivity and growth. Now, that's what economic theory will tell you. But when you look back over the data, the last 52 years, what you see is that the relationship between productivity and growth is a very, very loose one. So in other words, the OBR's sort of obsession with, if we can forecast productivity, we can therefore determine what the outcome for the economy is a fundamental, it's not supported by history. History tells you, if you believe that, you get it wrong over 2/3 of the time. Since the pandemic, the US economy has outperformed the UK significantly. Why has it outperformed? Investment spending's been about the same sort of level of growth. Broadly, government spending growth has been broadly similar in the US to the UK. What's dramatically different is what's happened to household consumption in the US relative to what's happened to household consumption in the UK. Consumption spending in the UK from household sector is pretty much in real terms the same as it was in 2019. In the US, it's grown, I think, over 12%. Now, that's reflected in the US savings ratio, which has fallen and is now at 4%. The savings ratio in the UK is about 10.5%. So basically, since the pandemic, we've been on a sort of thrifty 6-year journey. And the US consumers have said, no, we're going to carry on spending. So just imagine a situation where UK households had done what the US had done, that they hadn't saved more than they normally save. Now, in the long term, savings rates in the UK are about 5-6%. So if you say, well, if we normalize the savings ratio in the UK, that's 10.5 to 6. That's 4.5% of income. Just changing next year's savings ratio from 10.5 to 6 would add 90 billion to the economy. That's 3% extra growth. Just imagine that over the last 6 years, we'd year in, year out carried on spending instead of saving. We would have an economy that was much bigger than it is now. So, in other words, when consumers start spending more money, when they start to get more confident about the economy, when they're not getting such a good return on their savings in the bank, they will start to spend more. When they spend more, productivity will grow. So it makes a mockery of what the OBR are doing. Now, there's one other big important point, of course, which is we're apparently on the brink of an AI industrial revolution globally. Well, the reason we're on the brink of this AI industrial revolution is, of course, AI, the deployment of AI across all sort of industrial sectors will deliver great productivity growth, great productivity outcomes. Well, it seems that the OBR is ignoring that and just saying, no, productivity is going to be lower. Therefore, I think it's a ridiculous way to look at the UK economy.
Well, that's all of Rachel's claims tested. Let's talk about what you actually expect to happen in 2 weeks' time. Your base case, we talked about it earlier, some tax rises paired with some spending discipline. Which taxes do you think are most likely, and what do you rate as quite low probability?
Well, there's huge amounts of speculation, and there will be more speculation over the next few days and weeks. But my guess is that it won't be anywhere near as damaging as the consensus belief. So people like Robert Peston, for example, are talking, he believes that she's going to have to plug a 35 billion hole in fiscal arithmetic. I think that's nonsense, not least if she actually swallowed that sort of rubbish, I mean, I just think the Labour government's done for if it tries to do that. Politically, it will be so damaging. I think there'll be no way back for this government. What I think she'll have to raise some tax, or she will want to raise some tax. And for all the reasons I've been talking about for the last hour or so, whatever, there'll be some measures. There will also be some spending restraint, I believe. So my best guess is that the outcome will be something like 15 billion of tax increases. Now, there are, I think, about 100 different tax reliefs that cost the government about £200 billion a year. Now, there's plenty of scope for her to sort of look to those reliefs, non-indexation reliefs, for example, that would yield quite a lot of extra tax revenue. So I think there will be a series of measures that will pair the generosity of various the generosity of various reliefs that will result in higher tax take for the government. So some fiscal, some of that tax raising will come from those measures. Some will come from explicit tax increases, for example, on betting and gaming. And I would imagine there'll be lots and lots of measures introduced in the budget, lots of little things that will add bits and pieces here and there. But I think the overall picture is the 35 billion that some people are talking about is, I think, nonsense. I think it'll be something like 10 to 15. And I think that will be raised through a series of measures like the ones I've just talked about.
There's quite a lot of chatter about a basic rate rise for the first time in 50 years. And some of her phrasing in her speech made me think maybe that was what she was trying to suggest. We must all do our part. Do you think that's likely?
Not really, no. I just think it would be like delivering a bludgeon to your political opponents and saying, please come and smash me around the head with this bludgeon that I'm about to give to you. I mean, I just think it would be the most ridiculous own goal. I mean, the last time the basic rate of income tax went up was in 1975. Dennis Healey was the Chancellor. Weirdly, we had pretty much the same level of government spending to GDP, 46%. We had roughly the same level of tax as a percentage of GDP, about 40%. And, what happened, in Dennis Healey was not long for government as a result. Now, I'm not suggesting that there's going to be some sort of denouement to this government. They've got a massive majority, but it was over 50 years ago. I mean, I just think it would be so politically damaging for this administration, which is already struggling, politically. I just think they aren't about to sort of to open their wrists and lie in a warm bath. I just think that's not what they're about to do.
And of course, that tax increase 50 years ago led to an IMF bailout the following year. We've talked about IMF bailouts before. I know you think that that's not something that's likely to happen, but surely it is something we should worry about if that is a step that the Chancellor takes.
No, it's not at all likely. No, we're a million miles away from that sort of scenario. I talked about the similarities, but there are many, many differences. I mean, not least, inflation was at 25%. Interest rates were I think gilt yields were something like 20% or high teens anyway. I mean, it's just no. There's absolutely no reason to believe that we wouldn't be able to finance the deficit. Interestingly, I read today that Britain's largest asset management business, which is Legal in General, they have been adding to their UK gilt holdings because they think that they've got a more benign picture about inflation going forward, a more encouraging perspective on where gilt yields will end up, and they've been buying more gilts. I mean, that's the sort of narrative that I think blows a hole in this argument that there'll be some sort of buyer's strike and we'll have to go and borrow money from the IMF. It's just complete and utter nonsense.
And do you still expect momentum to build in the economy as rates start to fall?
This is the fundamental point, though. I know we've spent a long time talking about the budget, and of course, lots of people are sort of very focused on it, myopically focused on it. But the reality is, I don't think this budget is going to make any difference to the trajectory of the UK economy. None.
Well, let's bring this home. Let's make all this make sense for people who are investors in the UK. You're arguing that tax rises won't derail your growth view.
What I'm not saying is that the government's policy isn't harming the economy. But the harm that it is doing is minimal in the context of the more important drivers that will be driving accelerating growth in the economy. So, I would argue there are things the government could do to help the economy. It's not going to do them. It's actually going to do things that at the margin won't be helpful. But they're not significant enough to derail the outlook for the UK economy. Why? Because these are the things that will drive growth in the economy. Lower interest rates, lower inflation, very, very important. We're already seeing the early signs of the impact of lower interest rates and lower inflation, or the expectation of lower inflation, certainly lower interest rates coming through in the housing market, for example. So mortgage lending growth is now above 3 a year. Well, a year ago, it was below 1. Look at bank lending growth. Lending growth is now outstripping growth in deposits. First time in a very long time, since the pandemic. Consumer credit's growing at over 7%. There are early signs that the sort of thriftiness that UK households have been gripped by since the pandemic, and for good reason, you might even go all the way back to the financial crisis. UK economy has been grappling with a series of challenging economic events over the last 15 years. Financial crisis, Brexit, which was domestically challenging, that didn't help the UK economy. And then, of course, we had the pandemic, and then we had the war in Ukraine. Economically, we've had our fair share of crap, frankly, over the last 15 years. That's left all sorts of scars on UK households, which are evident in what I've been talking about in this podcast. What I now believe is that the UK households, having transformed their saving and indebtedness, UK bank deposits now significantly exceed loans. Household net debt is now a positive cash of about 350 billion. About 15 years ago, it was minus. We were net indebted by about 350 billion odd. I mean, the transformation that's taken place over this period is just mind blowing. That's over 22% of GDP, by the way, today's GDP. So look, massive transformation in household finances, very elevated saving, lower interest rates, lower inflation, more confidence. I just think it's inevitable that UK households will be saving less, spending more, driving growth in the underlying economy. And that better growth will drive better productivity. I'm sure AI will have beneficial impacts on UK productivity too. I just think the future looks a lot brighter. It's not perfect by any means, but it looks a lot brighter than a very, very crowded consensus believes.
And which sectors do you think are most likely to do well?
I think those that face the UK consumer. So you've got a combination, I think, of, first of all, very depressed valuations, unequivocally very low valuations in the UK, historically and in comparison with peers. But over and above that, what you've got is an underlying economy where growth will exceed expectations, but very much focused on areas of consumption. Consumption growth will be the driver of growth in the economy. That's where I think the positive surprises will be.
So which sectors would you focus most closely on?
I would focus on banks, house builders, retailers, leisure, all the sectors whose businesses and profits, earnings, revenues are driven by consumer spending.
And if the budget surprises to the downside on taxes, if it's worse than we think it's going to be, does that change your positioning on anything?
No,
Is there anything?
No. Let me give you a number that might put that into context. I think that the tax raising measures in the budget will be something like between 10 and 15 billion. I'd be surprised if it was more than 15. You never know. She really could sort of score even more than one own goal. But a 1% fall in the savings ratio adds £20 billion of additional consumer spending to the economy. Just that alone. Just think about what lower interest rates will deliver. Just think about what growth in bank lending might deliver as consumers become slightly more confident about the future, are prepared to borrow more, save less, spend more, save less. Just these things will be cumulative. So, but just one thing a 1% fall in the savings ratio from 10.5 roughly to 9.5, which would still be a very elevated level of spending, will add £20 billion of consumption to the UK economy. Important to bear that in mind.
Would you expect a sort of volatile couple of weeks either side of the budget, or do you think is everything largely expected?
Yeah, look, again, coming back to where we started, I think the speech was a sort of an exercise in expectation management. You know, given how lurid the some of the horror stories that have been around in the media now for months and months, the reality, even if it's worse than I think, won't be the shock that I think it could be if nobody had been saying it's terrible, there's a black hole, you know, it's massive, etc., etc.
Okay, give me one sentence, the single most important misconception you want viewers to drop before budget day.
The consensus is wrong. It's just so wrong, it's not true. Maybe another might be, don't believe the mumbo jumbo about productivity. It's just nonsense.
Neil, thank you so much again for helping us debunk some of the less truthful parts of the Chancellor's speech this week. It's always really interesting to get your point of view, and especially as we head towards the budget and find out what's actually going to happen. Hopefully we can find out how true some of this stuff is. If you've enjoyed this episode and you would like to hear more from Neil about the budget or about any other topic, please leave a comment down below and we will include that in a future episode. Don't forget to subscribe if you want to hear more from Neil in future episodes. And we are thinking about doing a live watch of the budget when it's on the air in a couple of weeks' time. If that's something you'd be interested in, again, leave a comment down below, let us know, and that's something we might do. But until next week, when we'll be back with more, thank you very much from Neil and I, and we will speak to you next time. Take care.